everybody, and welcome to the Trader Newsroom. The big question on everybody's mind is, will Chairman Powell, the Grinch that stole the Santa Claus rally? And my name is Michael DeJoyer. I'm the Director of Education here at Trader, and I am a licensed professional. And I'm joined by my co-host, Jill Malandrino, Global Markets Reporter from Nasdaq.
Hey, Mike, how's it going?
All right. So the news is obviously everybody is well aware after today's terrible market action this Thursday that the Fed funds rate is now between 4.25 and 4.5% after a 50 basis point rate hike. Federal Reserve has indicated that it might go as high as even 5.5% in the near term. The question, Jill, is how high will the Federal Reserve go?
Well, I mean, it seems to be that they are indicating they are going to go, as high as 5.1%. And I think the disconnect that you're seeing in the market is the market wants something else. The Fed is clearly doing something else until they see their policy strategy play out. So we saw, a lot of exuberance that one day when we got the CPI print that came in better than expected. So we're seeing that the inflation data is starting to contract a bit, which is a positive sign because it indicates that the Fed policy is working, but it doesn't mean that they're going to have a policy shift and just change on a dime and either pause or cut rates. It's not going to happen. They're not going to make the mistakes that we saw in decades prior. So I think, the market needs to come to terms with that. And in addition to what we're seeing with the macro, we have not seen, a rebase of earnings expectations. They have not come in. And until we see that capitulation in terms of the corporate side, I think, we're going to be in this type of market that is going to be relatively directionless and really predicated on what the headlines are coming out of the macro environment.
Right. Absolutely. Well, that's a lot. That's a lot, actually. In the news cycle anyway, from what I'm seeing and what I've been reading lately is that the news cycle has pivoted, and we've been talking a lot about pivots lately, certainly before the Fed interest rate hike. But the news cycle seems to have pivoted more about how deep of a recession it's going to be. It's kind of already assuming that the recession is going to be here. And it's not so much talking about interest rates and inflation anymore, but it's more about how deep will the recession be? Not a question of whether there's going to be a recession or not. That's kind of already been factored in. So what are your thoughts on this? Has the news cycle shifted from inflation and interest rates?
So, I think there is somewhat a general agreement that perhaps inflation has peaked. And I think, when it comes to recession, it's not necessarily a if or when, but the duration and how severe it's going to be. So, we've had a number of strategists on the show as we're focusing on our outlook content, essentially saying they expect it to be longer, but not as severe. This isn't like something that we saw in 2008, 2009. The risks that we have in the system aren't quite as systemic. So it's a matter of duration and severity that investors and traders are trying to figure out what that looks like. And, you have the soft landing camp, you have a couple that are, I've had a number of strategists on that were a little bit more bearish than I had expected, but, until we establish a trend that inflation is certainly coming down, that the economy is cooling off, and it's not just one data print, the Fed is not going to pivot. They're not going to change course, and they're going to want to see a trend and a number of months that shows that their strategy is working. Yeah. And then the argument will be, did they do this too late? Did they go in too hard? It's kind of a no-win situation for them because one, they did start raising rates late, and they had to go, severe and multiple.
They had to play catch up a little bit.
That's really what the question is.
They definitely had to play catch up a little bit, without a doubt. Well, we also saw today that the European Central Bank is following suit with the Federal Reserve, and they started to raise interest rates in Europe. I believe they had a 0.5 basis point rate hike from 1.5% to 2%. They also started to reduce the balance sheet, their central bank balance sheet. Question is, what effect is that gonna have on the world market? Is that gonna have any effects here in the United States as well on the macro scene?
Yep. So, I really think that the strategy that the ECB is taking is similar to ours as well, but I mean, kind of, work in lockstep with each other. Of course, what's happening in the EU is a little bit different because you have energy crisis and what's happening with the energy markets over there. So it's a little bit different of a situation. I think that, they're going to have to grapple with that. So, with inflation and a recession on the horizon and what looks to be somewhat of a difficult winter, I think they have a different set of circumstances they need to work through.
I mean, they're getting an even later start than the Fed. I mean, obviously they have lower interest rates, and their problem has a little bit more exacerbated from the whole energy crisis there in Europe. So I think that they have a little bit of a worse problem than what we're looking at here in the U.S. And certainly it's going to be interesting to see how the UK, who has an even worse situation than the rest of the EU, how they handle things. And not the best Photoshop in the world. I don't know if Chairman Powell would like it too much, but the big question on everybody's mind is, will the Santa Claus rally be stolen by the Grinch of the Federal Reserve and Chairman Powell this year?
You know what? I don't think anyone is expecting a major risk event once we get through Quad Witch on Friday, which, I mean, traders have already positioned around that anyway. It's not like it's a one-time liquidity event. There really is not much more on the calendar in terms of corporate, in terms of macro. So I'm not sure if we're going to see a massive rally. Maybe it's December 15th already. I think it'll probably be this chop with everything predicated on what's happening macro and geopolitically. But, stranger things have happened. But I can't tell you, the sentiment is overwhelmingly negative. And I feel like, okay, we get it. We get the sentiment's negative. We get everything's predicated on inflation and what the Fed is doing. But really, like, the next thing is what happens with earnings and when do we see that release there? So that's going to be like the next volatility event, if you will, outside of the macro.
So basically, we got the end of year earnings calendar starting around January 15th or so. That's when the big earnings numbers and the year over year numbers start coming in. That's pretty much what traders and investors are looking forward to. Well, listen, Jill, thank you so much for joining us today. And I look to see you in 2 weeks and
Yes.
in 2023.
Yes. Have a good holiday, everyone. Take
All
care.
right. Happy holiday.
Thank you.
Bye-bye now. All right. Let me jump to the charts here. Give me 2 seconds as I power up my my Dash Trader. All right. So hopefully this is sharing out to everybody. But I mean, you can see the big bad day that was today. We pretty much had a gap up on Wednesday, which, completely faded down. Actually, no, it was a gap up on Tuesday that completely faded down. This is on the SPY, showing here on my Dash Trader charts. So we had a gap up on Tuesday. The gap faded on Wednesday. We kind of opened flat, rallied up, and then by the end of the day, that had completely melted down. That is the day of the Fed announcement. We came a little bit off the lows, but then today we gapped down and really broke the lows of this latest pivot. Now, what we had mentioned in the newsletter, the Dash Trader newsletter, and anybody who is not already a subscriber to the Dash Trader newsletter, you can see here that we have this channel, a pretty well-defined channel. This would be the top of the channel line, okay, that we have kind of come into, I mean, almost exactly into the top of the channel line. And now what you would expect from a technical analyst perspective is that we would go down into the channel line, into the low of the channel line, or into a horizontal line, into a horizontal level, right? So here we are. That would be kind of the level that you would expect us to go down from a sheer, just traditional technical analysis perspective. It's a little worse on the QQQ. As you can see that the channel is not quite so pronounced, meaning that it's getting, pretty flat and narrow. But needless to say, on the QQQ, we we are heading back to the lower end of that channel, and the potentially could break the lows of that channel, which are in and around 255. All right, so here we are at 255. We have a move back down to the low of the channel range. And I mean, this is the reason why. I mean, take a look at Apple. You know, we say so goes Apple, so goes the market. We've been talking about this consolidation on Apple for some time, saying that if we break out or down out of this consolidation, right? And I mean, we're right there. I mean, I would almost argue that we did break the channel line and we're going to get a big breakdown in Apple. But what's worse is Tesla. I mean, these are the two strongest stocks previously. I mean, I'm going to just go back a little bit in time, but you can see Tesla had been really strong. Now Tesla is down about 55%. Today it was down even additionally as Elon Musk came out that he was selling some more stocks. It was up a little bit on the day, but he sold some more shares. I think $3.5 billion more shares of Tesla. You can see the volume has just been picking way up as Tesla has melted down. You know, here's Microsoft. We had talked about Microsoft being a little bit more positive than the rest of the market. Not the case anymore. Microsoft moving lockstep with everything else. GBTC. You know, Bitcoin. This is the tracking stock of Bitcoin. It is just listless and down. You know, I'm going through a lot of different stocks here. I'm going to see XOM. You know, the one bright spot in the market has been energy, and you can see that XOM, you know, has made a really significant comeback. And really is you know, we talked about this over the last couple of years that XOM had been a dog, and in the last year in 2022 XOM was a darling, not a dog. So XOM, that's ExxonMobil, you know, certainly doing much better. Okay. And we're just going to go through one more. Let's take a look at US Steel. US Steel, you know, a little bit better than most of the market, but also in that kind of channel range. Some of the old economy stocks holding up a little bit better. Here's 3M. You know, this is on a daily chart. Let's see. Yep, daily chart, 3M holding up pretty well. Let's see, Caterpillar holding up a little bit better than a lot of the technology companies. Just to name another technology company. You know, NFLX. You know, has bounced back a lot since its massive demise back in April and May when they actually lost subscribers for the first time. Certainly Facebook, another dog of technology. Or it started selling off a little bit earlier than the rest of the tech sector. And certainly Facebook is you know, kind of holding up a little bit better now, but because it had sold off earlier and harder than the rest of the tech sector. And that was in the beginning of the year when Facebook was taking a lot of heat, you know, on Meta, which really pretty much bombed after last Christmas. So needless to say, technology being very weak. Now, the one that we got to watch is the IWM. So we always watch the IWM because the Russell 2000 is the small cap index, and the Russell 2000 tends to be a lot more volatile when it comes to interest rates. So you can see that the Russell has already broken down out of its range. That's not unique to the Russell. We saw that in the QQQ, the IWM, which is the tracking stock for the ETF of the Russell 2000. That's moving down. If the Russell breaks 162, this could get pretty ugly for the Russell. As far as oil, we look at USO. So here's USO, you know, looking like it's put in a little bit of a double bottom. You got USL, which is the longer term futures contract for oil. It's the tracking stock for the 12-month futures contract. We also look at OIL, which is an ETN. But oil looks like it's put in a nice, you know, floor and might be getting ready for a move to the upside. This is GLD. This is the gold tracking stock. Certainly that had put in a nice base in and around 151 and has been holding up here at the 165 level. So GLD looking good as well. And let's take a look at, let's see, we got oil, gold. Yeah, pretty much covers everything. Let's jump back to the charts and wrap this up. So we also have another number one trader competition starting, being sponsored and hosted by Cobra Trading. So Cobra Trading is sponsoring the next number one best trader competition. We will be opening up the pre-registration very shortly. And certainly you'll be going to get some notices of that. But if you'd like to stay up to date with all things DAS, do so by signing up for our monthly newsletter. Simply fill out the form at the bottom of the webpage at www.dastrader.com. Subscribe to our YouTube channel, Dash Trader TV. We got a lot of good things in store for you coming up in 2023. But we certainly think that now is a great time for you to subscribe to our DAS YouTube channel, Dash Trader TV, for your newsroom reminders. We're going to be doing interviews on some of the top traders and how they use DAS to trade, as well as we're going to be doing some trading lessons on various topics. Everything from trading psychology to trading, trading using your charts, using your level 2, you name it. We're going to be doing trading lessons here on our Dash Trader TV channel. If you'd like to follow us on social media, you can do so at LinkedIn, Twitter, and Facebook, as well as Instagram, usually with the @DashTrader, suffix. Needless to say, thank you very much for joining us, and we look forward to seeing you in 2 weeks and in 2023. Happy holidays and a Merry Christmas and Happy New Year to you all. See you in 2 weeks.